today. The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 778, Nasdaq up 230, S&P's up 75, gold contract up $1.60, trading $17.28 an ounce. You get silver up 34 cents, $17.74 an ounce. Light sweet crude up $1.73, $38.85 a barrel. Notes and bonds. You get the 10-year right now down 12 ticks, 138.11. The 30-year up 2 points, 175.12. And King Dollar's up 177 ticks, trading 96.883. The euro is at 112. The yen is at 107.5, and the British pound is at 126 to $1. And if you think we are up a lot, which is 77 S&P points right now, folks, there's no doubt that is a lot of ammunition. That's 2.3%. But if you look at those European markets, they're up from 3 to 3.6%. So we'll see where this day is going to bring us. Tom O'Brien, we're spending money out there.
Oh, man, that's for sure, man. And how about, the numbers just staggering considering the day we had yesterday, where we were pre-market. If we happen to be hanging out Sunday night into early Monday morning and we saw the futures in the Dow 2 in the morning, right, 24,400, I said, don't worry, man. By the time the market opens on Tuesday, we'll have 2,000 points in the Dow. Easy. And we're there.
Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, outstanding program. If you haven't test-driven yet the Thinkorswim platform, real easy to do. Just sitting on our website, hit the banner, bring it up. You'll allow to trade with paper money each and every day. And we talk about defined risk. Guess what, folks? When you're gapping up and down, 70 to 80 or to 90, 100 S&P points, defined risk is a beautiful thing. Kevin Hinks, what's going on?
I'll tell you guys, this is, it was pretty interesting. The futures were up overnight.
Yes.
And, anticipating some retail sales and anticipating Jerome Powell's statements. We got the retail sales number that was, gargantuan, frankly, record numbers for retail sales. And it's funny, Ben Lichtenstein and I were talking about it this morning, and the general theme was, remember what we reported just a couple of weeks ago when unemployment and non-farm payrolls came out?
Yes.
This economy is clearly coming back faster than everyone thought and quicker than expected. And, Tom, how'd you like to be a financial forecaster right now and trying to guess what these data points are going to be?
Yeah.
You're not even in the same zip code.
There's no doubt. There's no doubt. And this is going to go down basically in history. There's no doubt.
Yeah.
And we know that, the key, one of the keys, of course, was that, yes, put money into the economy. The bottom line is that you have the folks spending the money, which, in many cases, and this is what's really a kicker, there's no doubt, in many cases, because of that extra $600, the bottom line, I had said to Tommy, if I was 20 or 21 years old at this point, right, the bottom line, if I got laid off, I would hope that they didn't get me back. I'd be out in Colorado. I'd be camping every night for like 3 months spending money, man.
and I think that's why people. I think that's where people are.
Yeah.
I think you're just seeing communes being set up where people are getting stimulus checks. There's no real rush to go back to work.
Right.
Unfortunately.
Yeah.
So now this monster that they've created, they got to figure a way to unwind it.
Right.
Very true.
Right.
Yeah.
Right. Which it will. I think it will.
Oh, yeah, of course it will.
Yeah. And what's cool, folks, okay, is that, this ends in July, okay? But, like priming the pump. I think this got the priming, and I'm sure, there's be plenty of people that wouldn't have done what I've done when I was 20, and they're going to save the money, and they're really going to have some bread, too, which is really cool. Do you know what I'm saying?
Oh, listen,
Whether
I don't
paying
want
for
to,
school.
right.
Yeah. They might be paying for school.
I don't want to discount what Jerome Powell did. I think history and the history of this last 60 to 90 days, Jerome Powell is going to come out looking pretty favorably on the way he negotiated this. Because one thing he did, and the administration as well, they pulled the trigger early and didn't hesitate.
Yes.
And that, I think, will turn out to be what caused this to be short-lived and snap back as hard as it did.
Yeah. And, folks, Jerome Powell is speaking right now. Now, one of the things he just first said, and this is pretty wild, that the timing and strength of the recovery is uncertain. Well, I think he better pull up the stock market.
Right. And remember, the one thing that I talked about this morning was last Wednesday after the Fed meeting, he threw a little bit of a wet blanket on the market for a day or two.
Oh, yeah.
When he spoke. And so if you're day trading this market and looking at it, you've got to get through Jerome Powell's speech today and his Q&A.
Yes.
That he doesn't put another damper on the market. But once he's done speaking, if he doesn't do any fundamental damage to the market with his words, we could go higher because what you just said, the foreign markets are higher than we are.
Yes.
Now. Yeah.
Yes, and
so it's crazy to think that there's room here, but when you see the foreign markets up bigger percentages than us, you think maybe we have some more room on the upside here.
There's no doubt. There's no doubt, and the aspect of the amount of cash that is still out here that is still like, okay, do I go in? Don't I get in? I mean, there's a lot of stories out here, folks, of a lot of very large funds that were conservative, and I can see why. I'm not,
Right.
God bless them. They've made, a lot of bread. I mean, I can see why they're conservative. Well, that being said, guess what? That cash is going to get put to use at some particular point. It's not just going to sit there, man. So.
Right. And the question that I brought up the other day on the on the TD Ameritrade Network was, Tom, what's Warren Buffett doing with all this cash he raised?
Right.
I mean, think about it. He announced very clearly that he got out of the airlines and he reduced his stake in the financials.
Yes.
So is this he's raising cash for no reason?
Well, I think, like just a lot of pros like that, they got caught. Basically, they didn't get caught short the market, but they got caught that this acceleration was so big that they didn't have the shot to buy the companies that they actually wanted to buy. Right?
Yeah,
I agree with that completely, and I think that's why what you're seeing in this market right now is the good news is exaggerated because there's cash on the sidelines just waiting to buy this market.
Yeah.
I agree with that completely.
Yeah, you can see it. And your Apple, Kevin, I mean, this Apple deal, the more I keep looking at Apple, I mean, is Apple just going to take over the whole world or what, man? It's like...
what they do is they're creating, and there's several stocks that fall into this category.
Yes.
It's Apple, it's Amazon. I don't even go so far in the very early stages. It's Square that's creating an ecosystem.
And what was the last one you said, Kevin?
Care of everything you want.
Square.
Oh, yeah. But for sure. Yeah, no doubt.
For payment.
Yeah.
And they create, they try to do everything you need.
How about Shopify, right? Same
thing.
Craziness, yeah.
Yeah.
Folks, right here, 45 minutes from now. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. Dow up 760, NASDAQ up 224, S&P's up 74. We're coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up at 795. You get the Nasdaq up 237. S&Ps are up 79. If we go inside the NDX first, we'll take a look at what's running the NDX. You got Baidu.com up 8.5%. You got Western Digital up 6.8. Ross Stores is up. Ross Stores is up 6.3, and United's up 6. Yeah. Taken away from it, T-Mobile. That had a big outage yesterday. That's down 2%. You got Dexcom off 1.4, Zoom's down 1.4. No big deal there. Inside the Dow Industrials, we know even before we get it there, Boeing's going to be moving that thing somewhere. When your Dow's up 770. Yep. You get Boeing putting 73 points in. Well, the only stock that is negative inside the Dow, folks, is Pfizer. That's putting 0.75 of 1 point. I
wonder how that plays into. Why are they negative, right? Maybe it's medical. Maybe there's good news on COVID. Maybe there's other areas. Maybe Pfizer. And I'm not sure. But yeah, it's crazy. They're still down 15 pennies when the market's just going bananas.
No doubt. If you want to see, though, I sent you this article this morning, Tommy, okay?
I started reading it, man. I read like the first few paragraphs. I said, was I reading this right? I went back and read the first few paragraphs again. And then I just got caught up in a few different things. But you're talking about tens of billions of dollars for some of the wealthiest medical companies in the world, hospital organizations, nonprofits that are already have been penalized heavily, right, for missed billings. I mean, we'll call it missed billings. It should be probably straight out, fraud.
Yeah. All right. They didn't have to plead guilty, but they paid money for basically fraud.
When you're paying
folks, I'll find it during the commercial. What it is, this is not shot money. This is like hundreds of, it's billions of dollars. That
it's
article,
tens
right?
of billions.
Yeah, tens of billions of dollars that the government, bottom line, that we, okay, gave in grants and loans to 4 or 5 big medical companies that already have paid fines to the feds for basically Medicaid fraud. It's like, oh, wait a minute. This is like, how wild is that? 1 second, you're getting that investigated for Medicaid fraud. The next second, someone shows up at your door and gives you $700 million, right?
Yeah, and I have it just in my email, so I can't really pull up the webpage. But some of the numbers that they're talking about, man, you jumped out there. Tenet Healthcare, right?
Yeah.
Universal Health Services and Beaumont Health received more than $36 billion in interest-free loans from the U.S. Health and Human Services Department program to help providers handle cash flow shortages caused by the pandemic. Almost $40 billion for those 3 companies alone, man. That's more than a third of the $100 billion distributed through that loan program alone. So it really jumps into it.
That's intense, man.
It is. It's just.
And you think you're getting something under folks with your $1,200 stimulus. Yeah.
It's exactly, man. And they go in there. So Medicare fraud, of course, that's what they're talking about. And one of the statistics I found interesting, so you have those 3 companies getting almost $40 billion interest-free, right? Medicare itself, okay, Medicare covers almost 60 million Americans.
Yeah.
It has a budget right now of $740 billion. Well, those companies alone are talking $40 billion. It's just when you talk, and then, so we spend $740 billion, and we probably spend it horribly, as in the amount of fraud in that $740 billion is tremendous. And then we're able to cover 60 million people for a year, though, and we just gave those companies interest-free loans of almost $40 billion. And I say companies, I mean, they might even be nonprofits, some of them, which complicates things even more, how that plays into things.
Pretty wild.
Yeah.
So,
hey, can we jump to retail sales, jump it back to everything? Because some of the numbers within here, right? So we got the number, as Kevin was saying, about 830. S&Ps were already positive by about 60 points coming in. 17.7% in May, big numbers, well above the 8%. Getting into some of the numbers of where that broke down, some cool stats in here to talk about. So excluding motor vehicles and parts, okay, which popped by 44%. Nobody was buying cars in the month of April, I think, man. That makes sense, right? 44%. May's gain came in at 12.4. Still best on record going back to 1967. Now, the whole expectation was still 8%. And then, of course, you had food services and drinking places, 29.1% rebound in May as well. Total sales, monthly gains set records. The economy is still making up for lost ground. Total sales were off 6.1% from a year ago. That doesn't seem that bad for May, man. We were just still easing into things, in my opinion. Now, the one thing about percentages you got to watch out for when you talk about, like, it's up 17%, right? Well, let's say you have $100 billion.
Yeah.
And you lose 50% of it. So you go down to $50 billion, right?
Yes.
How much do you have to grow to get back to $100 billion? You have to grow 100%.
Exactly.
So you only shrunk 50%.
Right.
But you need to show 100% growth to get back, right? So percentage growth on small numbers can be deceptive at times, but still, when you're blowing out the expectations, man. But I just thought cool numbers, even when you knock out, motor parts, that's a strong number for cars. You're probably going to see that accelerate much further in June if you got 44% in May. Because really, who was buying a car in even May, right? You probably, if you needed one, you can go out and get one. But if you were on the fence, maybe you say, I'll wait. I'll wait.
Sure, right.
So,
buy one off Hertz.
Yeah, exactly, right. That's the risk-reward scenario where it's like things aren't going to be. It's not like there's going to be no sales in a month on cars, right?
Right.
Versus you might be able to wait, maybe even things get even more dire where a company like Hertz, they have to sell off their whole inventory at a huge discount. Now, the other story that could be a big one, man. Did you see this story on, I think you pronounce it dexamethasone? So they're talking about that this could be a major treatment, man, and it's a pretty big study coming out of Oxford, and it's talking about this is it's a steroid, and they're talking about treating severely ill patients and maybe saving as many as 1 out of 3 to reduce the drug. It's a basic, just very cheap steroid to reduce inflammation, but the numbers they talk about here. It was 2,100 patients randomly assigned to get the steroid, with those of around 4,300 not getting it. So you're talking about 6,400 people in this study, man. And they're talking about this could be the immediate course of action almost immediately for people in there. Encouraging news, and I'm sure that could be playing into this as well, just coming out today.
Yeah, and what happens, folks, is that the inflammation is the killer. So you can bring down inflammation, it's a big deal. Let's go to John in Philly. Hey, John, what's going on, brother?
Good morning, Tom and Tommy. Thanks for taking the call.
Absolutely.
Morning, John.
Say, Tom and Tommy, I wanted to ask if you could give me some of your input regarding GDX. That ETF is currently trading right at 33. It's pulled back in the past couple of weeks, and it is, at least at this moment in time, bouncing off and above 32. And, I look at 32 as being potentially pivotal in that was the high of 2016 and then of February this year. Is that important? Does that mean anything to you? And can you just give me your GDX input on what you envision the next significant move?
Absolutely. So stay right there. We're going to take a quick break, folks. We'll come back. We're going to be talking gold, silver equities. We'll be talking the metals in general. Dow right now up to 779. Nasdaq's up 229. S&Ps are up 78. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 806, Nasdaq's up 231, S&Ps are up 79. We're talking with John from Philly. We're talking about the GDX. So the GDX, in general, John. Okay, this consolidation has been going on since April 7th. We rejected lower price yesterday, so I'd say that you can't bust them down. They're gonna try to bust them up again. That's how this is set up, man. I would like to see right here today. Is if we look at it, what you're going to see is this, is that what happened yesterday, folks, is that we go down, it rejected price, and what we've just done here, if I bring a few of the bigger ones up, what you're going to see is that we're actually just pulled back to where it had strength yesterday. Like if we look at Barrick had some strength at 24.51. We hit 24.26 this morning. We're at 24.24. Newmont the same way. So that's telling me that the setup's not perfect right now, but we both know, and if you've been in the gold and silver market for a while, folks, okay, when you reject price, whether it's at the highs or the lows, the risk now would be not being in it. That's my take on it because of the fact that we rejected it, and I think the top of the range is game now.
Great. I was thinking exactly the words that you just mentioned. The setup's not quite perfect right here, but I appreciate that input of yours, Tom, and we'll see where it goes from here.
All right. And as we know, because what happens here, folks, is this, and John knows this, these setups, particularly in the gold market, when they're really great, it's awesome. But there's many times that they're just off a bit, and then all of a sudden, out of nowhere, it goes boom, And, what I've seen is that, like right now, this is the first time in a long time we've been positioned in silver stocks. And even out of the gold report, I'm realizing, okay, I got 4 silver stocks and I don't have 1 gold stock. So it's pretty intriguing. Do you know what I mean? Because it could have been really bad yesterday. But that's telling me also that if, in fact, the silver stocks are stronger than the gold stocks, that's a big plus, man, because silver has been the laggard for a long period of time. I mean, it picked its head up, a couple months ago, but the silver market in general, folks, has been basically keeping that metals market down because the volatility is vicious, man. There's no doubt,
Very good. Thanks so much for your help. I appreciate it.
Cooking, brother. Have a great one, man. Have a safe one. So
that GDX, man, it is pretty cool, those levels, right? I mean, that is the gold, everything. You go back to, even what's cool is the high we had in February before this all started is the exact lows that we had kind of, when we spiked there, whether it was in early May, whether it was the last couple in June. I mean, that level, just like you're looking at, I get the same chart up at daily. You don't have to be a statistician to know that area, man, it's not just all those lows we've had since, what do you want, April 23rd? Exactly. But then you back it up to February. It's the exact high that we touched. Which is pretty cool. It's just in terms of an area that's important, man, because if you go below it, maybe you just come into, of a little bit of a dip. Even you're looking at a gap between, let me get my cursor. What day is April 20th? April 21st, even. If you go to the bottom of that day, you're talking about 29.55.
Right. And that's in 29. So check this out. This is pretty cool. 29.96. is the high of the low that was established in March. It's going to be very hard to break that down, folks. So you see the volume there? The volume's insane. So as it backs down to that, I always like to see it back down. You get a rejection of price. Yes. It's like, okay, that's what you're going to get here. Because I'll show you yesterday, folks, what you had in the SPY. So this is, this is a technical setup. There's no doubt. We had the gap down with 209 million. You went lower the next day with 194. Well, yesterday we only had 135 and rejected lower price, and what it did, it's like hard to even comprehend. It went right back to the breakout area and says, I don't want to be here. And now today's going to be a big deal because, I would say so. On the SPY, the SPY's 3 points over where it would fail. But, what it hasn't done yet is it hasn't got the lows of the high yet. Doesn't mean it won't, but we hit 315.64, and right now you're at 315.03. But if you close somewhere in the 312 area, let me get the exact number. Then that would be a failure on price and volume. So that would be the number would be 312.15.
Okay, and that's the high from the 11th.
Yes,
what are you looking at?
That's a gap down we're not going to get that kind of volume. It's not even close.
Okay.
The volumes on the way down were just huge. I mean,
okay.
But we'll see how this shakes out. There's no doubt that. There's a lot of bread swishing around the economy, though. There's no doubt about that.
Hey, and when I was trying to, we talked about a little bit of Fibonacci numbers, man. If you look at the run we had from March 23rd all the way up to the highs that we made, June 9th or whatever it is, you still had a long way to go just for a natural 382, man. You don't trade up 1,100 S&P points from March to June and then freak out if we go down 100 or 2, man. It's almost scary that it's going to get erased instantly again.
That's
because
right.
It feels like we have to go through a time period where it's not as easy to say the markets are going to be back at all-time highs. Because just like I was talking about, strong retail numbers, man, but back at all-time high numbers, I don't know how that correlates considering the earnings, right, and the revenue and
right.
Just like everything running on a perfect streamlined operation across the entire S&P 500 for all intents and purposes, man. So just be careful when this market rebounds that quickly. The amount of juice the Fed's putting in it, man, they're buying individual corporate bonds yesterday. That was a big boost there. It's in the long run, we're going to be fine. But just 2,000 Dow points in 30 hours, man. My goodness.
Exactly. And what you're going to have out here today, okay, this is where this is going to play out, is that you're going to have many equities, okay, that, the Robinhood traders of the world, they've been trapped in them for a couple days. And now if we look at United, United we had a low of $32. You're at 41.10. That's going to be helpful in a big way.
Staggering.
Right?
Yeah.
You know what I mean? So the reason I'm bringing that up, folks, okay, the market cannot, I can tell you this flat out, that the market cannot discount the amount of retail day traders in that Robinhood system. And the average age, I think, is 25 years old, Tom. I'll get the article.
Okay. Cool.
People are coming in saying, oh, it's small money, it's this or that. Guess what, folks? When you get 10 million accounts banging out, I don't care what it is, that momentum moves markets until it doesn't. And then the momentum, of course, the other side can go. But
it moves it both ways, exactly.
It absolutely does.
Yeah.
If we go take a look at those NQs, the NQs you absolutely do want to keep your eye on because the NQs, they did it yesterday. I mean, we're on the air. They start going, topside in a big way. There's no doubt. Now, the NQs, they made it up to 10,013 and, we're at 99.67. You don't want to see, I can tell you this, if the Qs get back inside, oh man, hey, this is interesting. So it's going back inside this right now, folks. 99.59.
We're getting a little sell-off right now.
Yeah, 99.59, the Qs, they get back inside that, they can be down to 98.62 in a heartbeat. And that would be really strange when, in fact, you have the European markets that are still holding price. That would be quite a reversal.
You got the S&Ps now, man. We're 35 points off where we were at 9 o'clock in the morning.
Oh, I see. Just as I was pulling those up, they just gave up 10.
Exactly. Dow up 600, yeah.
What's that market doing?
What's it doing?
What's that doing? Stay right there. Tommy and I come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 570, Nasdaq's up 178, S&Ps are up 58. And, let's go over to this S&P for a second because, if you're listening to our man, Mr. Larry Pesavento this morning, I'm not quite sure why he was saying that 10-15 time frame, but I want to see something for a second. So the high was established at 850. The second high was established at 1030. So we're going to find out why Larry was looking at that 10-15 time frame. So the S&Ps, folks, you had a high out here of 3167. You had 37 points off that. The number to keep your eye on here, if the S&Ps get below 3124, man, this market will give it up, which would be really a mind blower. But that's how this is set up. Where the Nasdaq did, it's right teetering right on it. Okay, it's 99.49.
Yeah.
99.49 is the 90. Oh, actually, it's 99.52. 1 second, hold on. Where's that click? Yes, not. Well, actually, it's already broken it. No, this is interesting. So it's 99.59.25. Yeah, it's below it, man. It's saying that the Nasdaq can basically get down now to 98.64. 98.64. Hold on 1 second. So that'd be another 100 points down. That Nasdaq is down 100 points, man. People are going to flip out, man.
Hey, that's 1%. 1% in these markets. And what's the VIX at as we talk about that VIX? Not really a spike, man. From 32 back to 33. We started the week off at 44. So not that big of a spike considering the pullback, but keeping in mind the S&Ps are up 53 points. I mean, interesting. I was just jumping around to some of the retail stocks. Target. So retail hitting different industries, as in Target benefiting maybe while COVID was there, right? So a little bit. But you had Target. I mean, Target just traded down more than $3, man, from a 121 to 118. You have Target negative today. Now, again, you're getting this inverse relationship, right? As smaller firms do well, the big giants pull back. But you got Amazon positive today. You got Walmart positive today. Why is Target negative when you get 17% growth in retail sales when they were only looking for 8%? You spiked to 129. So it really just speaks to the uncertainty across the board in these numbers. Because if you told me coming into 8:30, right, you already had Target positive, and you said, guess what, man, retail sales are going to crush it, but Target somehow is going to open negative. It's just wild.
I thought it was intriguing, Tom, on your show when you were talking about the aspect of, and I've been looking at this, folks, because picture where my head's into real estate in a monster way down at St. Pete, and when you were talking about the malls versus the strip,
Yes, it was talking about Kohl's a little bit, right? And Kohl's is actually in more strip malls than in the type of indoor shopping malls.
Yes.
And go ahead, but that would make sense, right? Just intuitively, being a person in a state like Florida where numbers are rising, not going to feel super comfy in a big indoor space like a mall. Might feel okay in an outdoor strip mall where people are wearing masks. You go into each place.
That's right. You pull in. It's really strange, but I've been looking at them saying to myself, and folks, that's just the opposite of what happened in 2008. So strip malls in general are called B or C, properties. Okay.
Yeah.
Even the big malls, you get the A malls, B malls, and in 2008, the strip malls went down dramatically compared to better ones. This point, it's really intriguing exactly what you're saying. Let's go to John in Orlando. Hey, John, what's going on?
Hey, good morning, Tom. Tommy, how you doing?
Doing great,
morning,
man.
John.
Yourself?
Hey, every morning you guys are part of my breakfast here. I listen to you on YouTube.
Well, that's a beautiful
That's
thing. We
awesome,
appreciate
man.
you growling and prowling with us, man.
We do.
All right. Hey, I already brought in at 63 DPST deposit. It's the regional banks ETF.
Look at this thing, man. Okay, so you get DPST. This is the Direction Regional Bank 3 times bull levered position. It's trading 77.33. He's up 10%. Waking up this morning. I see what you got. Yeah.
This is a wild ride always. It's like a roller coaster every day.
Yeah, right. Well, that's why you live in Florida, man. You live, in fact, you live where the biggest roller coaster is. Well, no, that's Busch Gardens. Busch Gardens in Tampa, Tommy, right? Yeah.
It is. Is that the biggest roller coaster?
Yeah. They haven't been able to open it yet because
the new one.
They just built a new one, exactly.
I saw it the last time I was there, man. I was at Busch Gardens in February, right before the shutdown. I saw that thing get built. Yeah.
I got to visit now.
Yeah, hey, listen, man. You get a setup here. I mean, the real question is that you're up 10%. Like, would you buy this yesterday or the day before?
Yes, but let me ask you: it depends on the interest rate, the 10-year bonds.
Okay.
These things move with that. I mean, what do you see with the bonds?
So if that's what you're banking on. The bonds right today, so we take a look at them. The bonds are down, okay? But you're going to see they're down and dramatically lighter volume. But these bonds still want higher price, lower yield. You've only got 864,000 contracts thus far in the 10-year, and I think you're going into 2-point-something million. Let me see. We'll pull this up. When we broke down, you got 1.4 million. Yeah, it's not that bad, actually. Well, no, there it is right there, 2.2. That's 137.30. We hit 138.
That's when we had the yield at almost 9/10, right?
Yeah, it's going to be hard to break this down, man. I would take your bread, man. They're up 10.
In your opinion, are we going zero rates on the 10-year or no?
I don't think we'll go zero because they're just going to manage. They don't want to go negative. They told us that a million times. They're managing this rate. And it looks to me like, the rate's probably going to stay between 0.6 and 0.9 for the next couple of years. Right now we're at 0.7 of 1. Because they can manage it. That's the bottom line,
Yeah, okay.
You had the break downtown last week. A false break, whether it's uptown or downtown, is, it came right back on the other side of it. So, it's like one of these deals that...
They're keeping it in range.
They're keeping it in a range.
Yeah.
They're keeping it in a range, there's no doubt,
Yeah.
Cooking, brother.
All right. Okay,
thanks,
you.
John.
Have a great one, man. Have a safe one.
Appreciate it, man.
Yeah, rates in general, man. I mean, who would ever think that you don't only have inexpensive rates, folks, that looking forward, the Fed is saying that that's going to be out there for 2 years. That's,
So here's what, last week, right, Quicken Loans, did you see Dan Gilbert that they're going to look at a possible IPO to the tune of tens of billions of dollars, right? That, to me, was one of those statements in terms of if rates are going to continue to go down and you're going to continue to be able to service the mortgage industry and push out, I think they're doing $20 to $30 billion a month. For the quarter, they said they're going to do $73 billion of mortgages. Yeah, up from 53 billion.
Right.
Okay, that's a staggering growth with everything going on. I feel like they might be at the peak, man, because Dan Gilbert would not be selling off his company and pushing it out to the public and neither, investors, all that stuff, if there was growth in the next year. So if interest rates...
I heard the analogy when you did it last week. The analogy, folks, was the Saudis basically doing an IPO in oil. It's true. There's no doubt, man.
You got to listen. I mean, Dan Gilbert, one of the, obviously a bright guy, man. He is not going to IPO if there's a lot of growth in the next year for that company. He's going to IPO if he sees it at the peak, and they're IPOing. So pay attention.
Yeah. Dow Industrial's up 520, NASDAQ up 165, S&P's up 53. Stay right there. Tommy and I come right back.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
BAM! The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us. You get a major failure here, folks. Okay, we started the program. The bottom line is that you had these markets up big. Inside the SPY, the number, a major failure inside the SPY is a close under 312.15. Well, we're already at 311.12. This is going to be some serious business here. In general.
It sure is, man. That is a quick sell-off, to say the least.
And in particular, what happens, as we were talking about a little bit earlier, Tom, is that you have Europe is still up 4 to 3.5%. 6%.
Yeah.
There's serious business out here. So if you are long that market, folks, just put a stop in, like right now, because if this thing goes down, it looks to me like you're going to end up a flat for the day. Bottom line, just why? Why stay there? Because you'll get another gap down tomorrow, man.
That's it. Anytime you can go up 2,000 points in just over 24 hours in the Dow, S&Ps were up 200 points. Just be careful, man, because the moves are going to be quick and they're going to be fast and they're going to be big moves like we see.
No doubt. So that Medicare article, Tom, right?
Yeah, to finish it up, I know we're wrapping up the program. So the headline, of course, was we were talking about in terms of HHS doling out $50 billion in aid to accused Medicare fraudsters, jumping around to one of them that caught me in terms of unnecessary admissions, allowing these companies. So Prime Healthcare Services, Ontario, California-based hospital, 45 acute care centers, 14 states. They collected $600 million in relief. In 2018, the company agreed to pay $65 million. Deliberate corporate-driven schemes. All right. Among the biggest recipients are the large healthcare companies. You have Tenet, we talked about, $700 million in loans, $300 million in grants. They've paid more than $500 million in fines just over the last 10 years, including $513 million in October. I hope that's not what this was supposed to be about, sending money to those companies, man.
No doubt. Stay right there, folks. We got Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.